on a typical performance benchmark, for me, if you're able, as a retail trader, if you're able to achieve 20% year on year, that's good already. So on a small starting capital, if you're able to just expound your capital 20%, you're able to beat most of the professional fund managers. But that's a different case because they're managing billions or hundreds of millions, right? So we have, as retail traders, we have the advantage to move faster and to build our capital faster, to go in and out faster. So if you're able to do 50, 60% year on year, and if you start from 1 million, then you can build your net worth. And the key there is consistency, because there are lots of traders who get lucky. They can make three years, they can act like superstars, gaining 50, 100% or 400%. But then once their capital goes to a significant amount, let's say from 1 million, you grow to 10 million. But then when they reach 10 million, they are going to encounter a 50% downside. So that will deeply hamper your growth as a trader. So what I did was I was able to balance risk management with performance. So looking back throughout the years, I think my annual performance is around 70, 80%. So that helped me really build up my portfolio starting from day one.
The types of market, right? This is what I use on a broad basis, right, to classify the types of market that we have. So on the left-hand side over here, you can see that we have strong trend and then a weak trend. And then on the x-axis, on the horizontal axis, you have low volatility and high volatility. So what I do is I always classify the markets into these 4 types. And type 1, right, is the most favorite type of market. And I classify volatility very differently from what most people does. In a sense, I look at volatility in the corrective movement, how deep the pullback is, as compared to when most people, right, when they look at volatility, they are looking at the average true range, ATR. Okay, so in this case, you can see type 1 has a very strong trend. That means the direction is definitely up, and then you have very low or very shallow pullback. And this by far is the easiest type of market for us to trade. Then you have the type 2, which is still trending, and this trend can be uptrend or downtrend. And type 2 market has very high volatility. That means your swing points is very wild and very deep pullback instead of the shallow pullback that we are seeing in type 1. Then that's where in these 2 types of market, usually you can apply any sort of direction strategies like swing trades, like position trades. It will work well because there is a trend. So the tough part comes, right, when the market or the security that you are trading goes into this type 3 or 4 market. So in this type 3 market, it is where there is no trend at all. So largely it is just going sideways. And type 3 is the that kind of weak trend and yet low volatility. That means it is tight range bound and everything is just stuck within this a support zone and then a resistance zone. All right. And that's type 3, which is not very common, but we tend to see it from time to time.
Before we get on to some actual trading stuff, let's talk about some pros and cons and talk about the way a prop firm is structured for you a little bit more. I've put down number 1 pro and con is that you're trading around others, and the con is you're trading around others too. So it can work for you, it can work against you. I've seen people want to come into a dealing room just to be in that environment. Fair enough. If it's something it helps you get out of bed in the morning, I guess, I don't know. But I've also seen it work against people. For example, if people are going through a losing patch, they can kind of get stuck in a rut with other people that may be in a losing patch, and that kind of negativity can breed more negativity, and so on. So it can really work against you being in that environment, but not always, of course. Generally, it's a positive environment. It can give you that discipline. It can also distract you from the way you should be trading. So there's a point for a new trader that goes through that development stage where it's great to be around people, but there might be a point after that where it's better for the individual to go off and do their own thing. It's everyone's different. Another pro, they will teach you stuff there, and I'm going to talk more about that in a minute. But it might not be the right stuff for you particularly. It might be the place for you to start, but not the place for you to continue. and I've put there on the slide, who does number 2 work for? Ramos and Powers. But what I mean by that is a prop firm will probably, and most likely, or the ones I've seen, will push you towards a certain trading strategy that's right for the firm. Some firms will charge you commissions, for example, and they will want to make sure that they're earning enough money in terms of commissions out of you.